What's going on, everybody? So in this week's recap, we're going to be covering the majority of the indices and the gold trades. I wanted to quickly kick this video off breaking down the NZD CHF sell we are still holding. Now, this trade's breakdown was completely based off of candlestick patterns, and the reason for that is if you go onto the 12 chart, if you go onto the 12-hour chart, you can see that we have a heavy if you go on the 12-hour chart, you can see we had heavy bullish momentum. We did break the previous high of about 62.95, 63 zone. And once we broke that, which dated back all the way to June 8th, you could tell that the market was coming to a point of exhaustion. Now, as you can see, the market broke to the highs, huge consolidation zone, huge confusion zone. And the reason for this is because the market was running out of momentum. It needed to fake a downtrend to grab more orders and to slap more trader stop losses so it could continue the bullish push. So after that brief fake out of the sell zone here, you can see people sold off heavy, market pulled back, and I wanted to continue the bullish push. Now, the reason for my actual entry is because this was the fake out zone. The market was trying to test how high it could actually push. And when the market finally ran out of momentum coming into the 62.58 zone, the prices started to dip. The market had 3 vector candles to the high before it fell into a nice area of consolidation. Now, I placed my entry just at about 63.08, which was a little earlier than I had originally wanted to. I wanted to get in at the very peak of the reversal zone, but simply could not do so. Market pulled back a bit, formed the second zone. This first zone, the reason I had this zone here, and the reason for my entry price is because this was the previous high. The market consolidated for a bit, peaked my entry, and went back into a little bit of a stop. Market did come back about 25 to 30 pips, I would say, before it finally decided to sell off. Now, the reason I was confident in this trade is because we had a nice peak area of resistance. The market tested it once more before selling off on the dip. So we're currently about 70 pips in profit. Market peaked at about 75 pips before falling into a little bit more of a consolidation zone. But I do plan on holding this trade. I want to get it to dump off one more time before I secure my bag. We do have a take profit of about 208 pips total. So I don't think it's going to go all the way to take profit. I don't think it's going to crash that far because the market will evidently need another correction zone. But as for right now, it is Friday nights, early Saturday morning right now. So tomorrow at market open is when I'm going to take a look at this pair. But I do expect it to dump off once more before I choose to close my profits. So now with that said, I'm going to jump right into the indice and gold trades. Alright, now that we're on gold, I'm going to start this video off with 2 limit orders that missed. These both did over 100 pips. The first one actually did over 200 pips. And it was a little upsetting that the market decided to play with my orders the way it did. We could have had well over 300 pips capped on those 2 orders. But the market chose to tease our entry prices. The first one came down at this little peak. I wanted the market to drop down to about 1860. As you can see, the market did come down to about 1860.3, which is above our entry price. So I'm going to quickly mark up the entry price now. It was at about 1860, which is right about, I'm going to put it right there. Now, this is the first order we had. The market did not trigger our price, and we were not executed, and we were not entered into the trade. So that was upsetting. Market did over almost 400 pips since that missed entry price. Market kicked up once more, and I did set a second entry right about here. And as you can see, market did not execute that order as well. So, but we did miss out on about 300 to 350 pips, and we did not get into those trades at the time that I wanted to. So that's the first order I'm going to show you guys on the screen. Market was playing off of a lower low. That's why I chose to enter into my first buy position. Second buy position was entering off of a retracement. So after we missed those 2 trades, the market pulled back once more to the price zone of 1864. That's where we entered our actual gold trade. This trade did over, I don't have my numbers here, so this trade did over 300 pips from the entry zone. Market did come back into a little bit of a drawdown before we actually went into profit, but nonetheless, these are wick entries, and I was very happy with them. And moving on from there, market pushed up into the second area of resistance, broke right above after a little bit of a rejection zone. Market pushed up even higher and retraced once more, and then bounced off of the support, pushing up into the 1896 zone. So you guys can see the sell zone here. We had a second entry placed on gold. We did close the original buy entry with about 80 pips. The reason for my closure again is this little area of rejection. It was being rejected off of a little weak area of resistance. Of course, the market did break above that resistance moving forward, but at the time I did see a little bit of a confusion area, and that's why I wanted to close the trade. I wanted to get away with our profit and move on into the sell position. But the market did break above, like I mentioned, is like you guys can see on the screen. The market did push right through into our stops. Our stops were at 100 pips, so they were this wide. This was a 100 pip stop, as you guys can see here. And it was upsetting. We did end up losing a lot of the profit secured on gold, but that was made up in the other markets. Now, again, this trade did hit stop loss for 100 pips. It was off of an area of resistance. Of course, market broke above. I should have anticipated that coming simply because this was a correction move. So I do believe the market's going to enter into more bullish momentum coming into next week because the market needs to correct itself after this huge dump off from earlier. So moving on from that, we're going to jump into US oil. Getting into this quick oil breakdown here, of course it is along a weak area of resistance, but going into the 1 hour chart, you can see we do have a little bit of an ugly head and shoulders pattern forming. And this trade was based off of complete price action, not in the sense that we have previous key zones, but we do have a current zone area here. Of course, market peaked off at about 43, the price point of $43, but the market did sell off, forming this area of confusion. So you can see we do have 2 bearish candles, 1 bearish candle, a nice area of resistance, followed by one more test with a very, very huge bearish wick. Now, what exactly does this mean for us? This means that we do have a nice area of resistance. So inside of the zone, we entered in at about 41.6, and we did go into an immediate drawdown. Now, this market right over here, I did not have a reason to close the trade. I didn't have a reason to really wonder how the trade was going to go, because off of this peak point right here, we do have an area of resistance now. And once the market did test that area of resistance, it immediately reversed down towards the bearish side. Now, once it got into a bearish area of momentum, market just continued to sell off heavily. Now, as we approached the $40 area, the market did reverse, which I'm going to put on the screen right over here, because this is a nice area of support and resistance. Now, if the market does break below the zone, the market's going to continue to sell off, but I do expect to have one more test, at least to the area of 41.60. And the reason for that is because the market did just completely break through that floor. So it only makes sense in my books to see the market retest it once more, just to see how the market plays when it goes to push for the $45 zone. So again, I do expect to have one more test, the 41.60 point. And upon the approach of that area, if the market breaks above, I do expect to push for the 45 zone. But if it does not, I expect to see some heavy sell-off pressure. So this was a very nice oil sell-off. I do expect to see it retest once more. Going into next week, I want to see how the price pushes for that zone. If it does not, I do expect the price to at least get to about 41.30 before it makes its move to sell off once more. The next trade we're going to jump into is the current hold on NAS 100. Alright, so on the screen is NAS 100. This is a buy trade we are currently holding, and the reason for the current hold is simply because the trade has not reached its maximum potential. Now, by maximum potential, I do mean the area of 121.60, and that's simply because this is a nice area of traffic. As you can see, we have a nice area of resistance over here as the market approached it once more before breaking above, an area of confusion. And as we approach it off of the sell-off, we have heavy market confusion. So that area of 121.60 is a price point where I expect the market to approach once more. Now, the reason for the entry was a break above a nice area of support. The market approached it several times before it took off, each time completely respecting that zone. The only time prior to that it respected it was after the market broke below and retested it as resistance. So the area of about 1179 is a very key point in the NAS 100 market, and that's why we entered into a buy position. The market tested it 3 or 4 times before, which backs up my area of entry. Hence the reason we entered onto the buy position and are expecting it to take off from there. So again, I do expect the market to hit at least 121.60. That is a key price point in the market and is an area where I believe the market can easily achieve. So again, we are holding it currently. We are up about, from the area of entry, we are currently running at about 161 pips. Going into next week, I do expect the market to pay in full and achieve the take profit of 320 pips. Now, SPX 500 was a very nice trade. It was based off of downtrending pressure along with the approaching of the resistance zone. Now, this trade did pay off At about 230 pips, we did not hit take profit at all. The market did reverse back up and evidently hit our stop loss. So we did catch a nice little bit of a retracement off of the downside. And this trade was very easy to spot with the downtrending pressure along with a key area of resistance and support. So we had several touches prior to the trade actually being executed, and we did get in at the little end of the trade. So the market pulled back, retested the downside support once more, or resistance, and did go immediately into profit before approaching a stronger zone of key support. Now this trade reversed right after, did about 230 pips like I mentioned again, but this trade was at a key zone. Now these key zones are very easy to spot when you have a wedge pattern formation forming, and if the market does happen to break below, followed by a retest to a key zone, in this case being the 35.50, before reversing back under once more. So if you have a wedge pattern that forms and the market plays a little bit below, expect the retest to be a nice wick before the sell-off pressure continues. But in this case, the area of support down at 35.10 was stronger than the support above, thus having the market reverse back up and continue in a bullish manner. So again, going into next week, I do expect to see one more test to the 35.50 zone before the market takes off on heavy buying pressure. But in this case, we did get about 230 pips before the market reversed, and that's more than enough for us to actually reap the benefits of trading indices. That's going to quickly wrap up this past week's video. This was a very quick recap, very to the point, and that's simply because I want you guys to be getting the most out of these videos in the shortest amount of time possible. So again, if you guys have any questions, if you guys have any suggestions for the videos coming up, again, feel free to message me. I have had several of you guys message me with suggestions for this video series, and a lot of you wanted the videos to be shorter, which is why I'm getting these videos in a tighter span of time. So again, with that said, take care guys. I'm excited to see you guys this Sunday at market open. Until then, take care and keep working hard.